I promised that I will be in Bahrain on the 24th of May, Friday. The location has been fixed. It's Hotel Rami Grand, opposite to Seif Mall. Those desirous of meeting me in Bahrain can contact my team at the WhatsApp number given below or drop an email at the email address given below. See you in Bahrain on the 24th of May.
Hi everyone, welcome back to Be Rich. Today I want to talk about gold. What about gold? Well, recently gold has been rallying and investors have been cheering. Like Anand said, if you had listened to him and you've been buying 400 grams or 100 grams of gold, a year back you'd be seeing double returns or some great returns in this. And we have understood the reasons why this gold is rallying right now. It is the Fed interest rate, and also the geopolitical tension, which is persistent in the world right now, is forcing central banks to look at gold. Even RBI has been binging on gold. Chinese central banks have been binging. Simple reason is US has been using the dollar as a financial weapon, and the treasury is being held hostage, especially when it became apparent during the Russian oil embargo and the Russian sanctions, where US dollar payments were refused and it being removed out of SWIFT and international dollar markets. So this led to a lot of thinking inside all these central banks, and they've decided it's better to hold gold than to hold US securities, because simple reason, at least in gold, you holding it in this, you do not know when the rug will be pulled out under your feet. So all this kind of thought process has also led to a significant portion of the gold price rising, being central banks hoarding gold. The other, of course, is being the inflation and the interest rate cycle in the US has been pushing gold prices higher and higher. So yes, so if you have been an investor in gold and you've been investing wisely, like Anand says, you will see a lot of returns in gold. But this has led to a lot of problems for RBI. And what is the problem for RBI? In India, gold loans are very popular, and gold loans are especially popular in lower income families to middle income families. People who do not have alternate ways of borrowing money, raising funds, usually rely heavily on gold loans. And this has been the problem for RBI for the simple reason these are the people who are the most sensitive to any kind of shift in economic headwinds locally and globally. And central bank has been cautioning banks against lax practices such as disbursements, and asked banks partnering with the startups to follow regulations stringently. A lot of banks have tied up with startups trying to entice people into taking gold loans through various means and methods. RBI is saying, please follow the regulations stringently. So I thought we'll take a little bit of a dive into this and see what is this gold loan. In RBI, the gold loans are very simple to understand. Gold loans can be given against the pledge of a gold ornament, and both the interest and the principal are payable at the time of maturity. So when the gold loan comes to fruition, you have to pay interest and the principal. It's also told banks to have a board-approved policy that will prescribe ceiling for the quantum of gold loans. So RBI has told banks have a policy, then there's a ceiling, the quantum of gold loans which are allowed. And what are the terms for the gold loan? Gold loan has said loan cannot exceed 12 months, and the borrower can make a bullet payment at the end of the loan term. And all gold loans are governed by RBI's income recognition, asset classification, and provisioning norms. So if the borrower does not pay back in 90 days, the account will be classified as a non-performing, and also the regulators have ruled the loan to value not to exceed 75%. What is loan to value? Loan to value is the amount of loan the borrower can get against the value of the gold. So let's say the gold is valued at 100 rupees. The borrower at maximum can take is 75 rupees. RBI said banks should maintain this at 75% throughout the tenure of the loan, and all loans extended against pledged gold ornaments. This means if the value of gold falls, the borrower will have to repay a portion of the loan to maintain that LTV. This is where the problem lies. Okay. So how do banks value gold? Well, RBI has told the banks you can take historical gold spot price data and consistently disseminate by commodity exchange regulated by the forward market commissions and valuation of gold. They said you can also consider the declared gold prices by the Indian Bullion and Jewelry Association. So why is RBI concerned? It said you have to maintain LTV, gold to value, nothing more than 75. So now there has been a bull run in the gold market, and this has led to people borrowing more. Let's say last year you could borrow 75 rupees against that 100 rupee gold. Now that same gold is now the 200 rupees. You can take 150 rupees for that same gold. And people who have gold loans, existing gold loans, have been borrowing more against the existing gold. And like I said, what happens when the price correction comes? When the gold price corrects, and it will correct when the Fed decides to move the interest rates to the lower side, these gold loans are going to come into boil. Boil in the sense that they will come calling, where banks will expect people to make part payments to bring back their LTV to below the 75% stipulation. And if gold prices are correcting, like they've risen over 20% in the last year, so over a year they correct by another 20%, you can expect tremendous amount of pressure on these gold loans. People who have borrowed to the hilt. And like I said at the beginning of the video, the people who have borrowed these gold loans are people who are usually in the lower and middle income strata, who don't have regular ways of showing income, and they're not usually eligible for loans in banks for other ways of means of method, like personal loan or any other credit card loans. So they rely on this gold loan to pay and raise funds quickly. So these are the people who will be mostly in danger when this sudden pressure falls upon them to bring the LTV down. So RBI says data released by RBI's commercial banks exposure on gold loan has risen to 1.2 lakh crores as of March 2024. That is 15% higher than the previous year. Currently, most banks' NPAs in gold portfolio is near 0%. That means most people who have taken gold loans have not defaulted on it. But if suddenly there's a change in the headwind, let's say there's a double whammy where there's an economic contraction in India and people are finding it hard to raise money. At the same time, there's a correction in the gold market. It can be a double whammy for these people and they'll be in deep trouble. And this would raise significant problem for the banks, and that too in turn for the RBI. So this is why RBI has taken even action against ILF Finance and has banned IILF Finance on March 4th, providing any gold loan unions because of irregularities in its lending practices. Gold loan comprises 32% of the core business of IIFL, which is around 20,733 crores of the total under assets management. So this is what the reasons for that behind RBI's slap on the hand or slap on the wrist is for, because of the fear they have that the gold prices are boiling at a very high price. And if we do see a correction, when Fed decides to move, what can happen, the ripple on effect. A lot of you wonder, watching the video, why does Anand talk about the interest rate so much? Why does he talk about macroeconomics so much? How is that going to affect us? How does it bother us? And you might be even wondering, people who are having current gold loans might be wondering, why do we care? This is the reason you care about why the butterflies in the middle of America starts flapping its wings. You create a hurricane here in the Bay of Bengal. There's no story like that, analogy like that. So you can understand why the Fed moving interest rates can have ripple-on effects down the road like this. Thanks for watching the video, and I'll see you in the next one soon. Bye.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.